Welcome back to the Deep Dive. We're here to make the complex a bit clearer.
That's the plan.
And today, we're jumping into SoFi Technologies. You probably know the ticker, SOFFI.
Yeah, a big name in fintech. They've certainly, evolved.
Started with student loans, right?
Exactly. Student loan refinancing was their thing. But now they're really pushing to be this all-in-one digital finance hub, kind of a one-stop shop.
Mm-hmm. And for anyone thinking about investing or just watching this space, there's a really interesting part of their strategy we should focus on today. Their loan platform business, the LPB.
Right, the LPB. We've gathered some info, and we really want to unpack what this business actually is and what it means for SoFi's, growth and financial health going forward.
And there's a perfect starting point, that big recent news.
Ah, yes, the headline that caught our eye. SoFi securing that $3.2 billion expansion for the LPB, agreements with Fortress Investment Group and Edge Focus.
A pretty hefty number. Definitely feels like a major step. So, okay, let's break it down. What is the LPB, really? And why is this $3.2 billion deal such a, big deal?
Okay, so that $3.2 billion, it's interesting how it's structured. There's a $2 billion extension with Fortress. They already had a relationship there.
Right.
And then another $1.2 billion comes from a joint venture between Fortress and Edge Focus.
Okay, so Fortress is doubling down, essentially.
You could say that. This actually pushes Fortress's total commitment now to over $5 billion just for this SoFi LPB.
Wow.
Yeah. And that scale, that kind of commitment, it really signals a deliberate strategic shift happening at SoFi.
Okay, so for listeners trying to connect the dots,
Yeah.
what's the actual function here? How does the LPB work day to day, and why is getting this kind of capital injection such a, potential game changer?
Well, fundamentally, this expansion points to SoFi moving towards a model that's, let's say, less capital intensive for them. They're leaning more into generating revenue from fees.
Okay.
So think of it like this. Instead of SoFi putting up its own money to make a loan and then holding that loan on its books, they're originating more and more loans specifically for these outside partners like Fortress and Edge Focus.
Ah, okay, so SoFi is the loan factory, if you will. But Fortress and Edge Focus are providing the bulk of the actual cash behind those loans. And SoFi collects a fee for setting it all up.
That's a good way to put it, exactly. The CEO, Anthony Noto, he's basically said this lets them meet all the borrower demand out there.
Which is apparently quite high.
Seems so. And crucially, it helps pivot the company towards more predictable fee-based income. They're not carrying the full credit risk, you see.
Right, because the loan isn't technically theirs long term.
Precisely. And they don't need as much of their own capital tied up compared to, traditional lending.
Okay, this is where I think it gets really interesting. This LPB thing, it lets SoFi reach a wider audience too, doesn't it? I remember their early days were very focused on the Henry's high earners, not rich yet.
That's a really key point, yeah. The LPB lets them cast a wider net. They can serve people with different credit profiles beyond that initial Henry target.
How does that work without increasing their own risk?
Because ultimately, the loans are funded and held by the partners. So SoFi can bring these new people, these new members, onto their platform.
Without putting their own balance sheet on the line for potentially riskier borrowers.
Exactly. It's a way to acquire members from diverse backgrounds without directly shouldering the associated credit risk themselves.
Which probably explains some of that impressive member growth we've seen. Wasn't it something like 40% year over year?
Around that, yes. It's substantial. And the LPB is certainly a major engine driving that growth.
So even if Fortress ends up holding the loan note?
The borrower's experience is still primarily with SoFi. That's the crucial part for growth. They apply through SoFi, manage the loan on the SoFi platform, make payments via SoFi.
Ah, so it pulls them into the SoFi world, the ecosystem.
Precisely. It funnels them right into the ecosystem.
And once they're in that ecosystem, using the app or website, SoFi can then say, hey, have you checked out our banking or investing or insurance?
That's the strategy. It's an integrated ecosystem by design. The goal is better member retention, obviously, but also cross-selling and upselling more services.
That makes sense.
And the numbers suggest it's working. Something like 40% of new members try out a second SoFi product within the first 30 days.
40% in a month. That's pretty sticky.
It's significant engagement, yeah. Very valuable for long-term value.
And I think you mentioned even when the loan itself is passed to a partner, SoFi often keeps the servicing rights.
That's often the case, yes. They handle the day-to-day management, the payments processing.
So that's another touch point with the member and another revenue stream, right? Ongoing servicing fees.
Correct, on both counts. It generates ongoing fee revenue over the loan's life, and it maintains that direct relationship, keeping the door open for, future business.
So the LPB lets them expand their credit box, serve more people, without taking on all the risk, potentially leading to higher customer lifetime value because they can monetize a bigger group.
That's the idea behind it. They can engage with and potentially monetize a much larger pool of members over time.
It definitely sounds more strategic than just being a loan originator where the customer might just take the loan and leave.
Yeah.
That ecosystem seems key.
It provides a potential competitive advantage for sure. And look at the market share numbers. Didn't they hit something like 60% of personal loan originations in Q3 2024?
Yeah, that figure stood out. A really dominant share in that specific market, at least for that period.
Okay.
Okay, so how do they keep this LPB engine humming? What are the key strategies to sustain this kind of growth?
Well, we've already hit on a major one. Securing these big institutional partnerships, getting those large capital commitments. We mentioned Fortress and Edge Focus, but there's also Blue Owl Capital. Combined, we're talking over $10 billion in recent commitments.
$10 billion. That's serious firepower. What else?
Sticking to that fee-based capital light model is central. It aims for more stable, predictable revenue that's hopefully less sensitive to swings in the credit cycle.
Right, less bumpy.
Hopefully. And continuing to expand the addressable market, serving more borrower types, again, without piling on direct risk.
And the tech side must be huge here. SoFi prides itself on its technology, platforms like Galileo.
Absolutely critical. Their tech is needed for efficient origination, underwriting, servicing, all of it. And it has to integrate smoothly with the partner systems, too.
Makes sense.
Plus, they're active in securitization, taking pools of these LPB loans and packaging them up for sale to other investors.
Right. Like that recent deal, wasn't it around $700 million? $697.6 million, I think.
That's the one. It provides liquidity for them, frees up capacity, and it also kind of validates the quality of the loans they're originating in the eyes of the market.
Shows there's demand for this stuff.
Exactly. And beyond loans, they're always looking to add more products, explore new markets, reach more customer segments.
Tying it all together is
The focus on customer experience and keeping people engaged within that ecosystem, that's fundamental to retention, cross-selling, and boosting the overall value per member.
okay, so the LPB isn't just some side hustle. It feels deeply woven into their main goal of being that central financial app for people.
I think that's a fair assessment.
So let's shift slightly. How does this LPB specifically help SoFi diversify its revenue? For potential investors, that diversification is usually seen as a positive, right? Low reliance on one thing.
Absolutely. The LPB is key to that shift we talked about, moving from primarily earning net interest income like a traditional bank.
The difference between interest earned on loans and interest paid on deposits.
Right. Moving from that towards more fee-based income.
Yeah.
Origination fees up front, servicing fees over time.
And fee income is generally seen as more stable, less tied to interest rate moves.
Generally, yes, it tends to be more predictable. And importantly, it lowers SoFi's direct exposure to credit losses if borrowers default. Plus, less regulatory capital is typically required compared to holding loans on your own balance sheet.
Less risk, lower capital needs. Sounds good.
And we've seen data suggesting the LPB has better gross profit margins, maybe around 40% in 2024, compared to like 25% for their traditional lending division.
40% versus 25. That's a significant difference in profitability.
It definitely helps the overall bottom line.
Yeah.
And using external capital, like from Fortress, lets them scale up loan volumes much faster than they could using only their own resources. More volume means potentially more fee income.
Great. Scales faster.
And it adds a revenue stream that's potentially less cyclical. Traditional lending can really slow down in recessions, but fee income might hold up better, relatively speaking. So it diversifies the overall mix, mitigates some lending-specific risks.
And we keep coming back to this, but the members they bring in via LPB loans are then potential customers for everything else SoFi offers. Banking, investing, tech services.
Exactly. It fuels the cross-selling engine. And keeping those servicing rights means ongoing revenue and maintaining that crucial long-term relationship for future opportunities across all business lines.
It feels like SoFi's strategy here fits into a wider trend we're seeing, right? Fintechs partnering up with private credit funds, institutional investors.
Yeah, you see that more and more. It's a way for fintechs to access large pools of capital and for investors to get exposure to consumer lending or other assets originated through these tech platforms.
So this whole diversified capital-light approach,
Yeah.
driven by the LPB, could it give SoFi a genuine structural edge over competitors still stuck in the old model of just lending off their own balance sheet?
That's certainly the potential advantage they're aiming for. It offers a path to growth and scale that's less capital intensive and theoretically carries less direct risk over the long haul. Something for investors to definitely consider.
Okay, so let's try and wrap this up. Bringing it all together, this expansion of SoFi's loan platform business looks like a really core strategic play. Big implications.
Seems so. You're looking at potential for significant growth, better revenue diversification, maybe a less risky financial profile overall.
Yeah, the key takeaways seem to be that deliberate shift towards fee-based income and the ability to reach way more customers without necessarily loading up their own books with all the associated credit risk.
Those are definitely central points for anyone analyzing SoFi.
And, the fact that major players like Fortress and Edge Focus are committing billions, that signals some serious institutional confidence, doesn't it?
It certainly suggests these sophisticated investors see value and potential in SoFi's model, and particularly in this LPB strategy. It's a vote of confidence in a way.
Well, hopefully this deep dive has shed some light on SoFi Technologies and what's going on with their loan platform business. We hope it's provided some valuable insights.
Hope so too.
Remember, if you found this helpful, please subscribe, maybe give us a like, and hit that notification bell so you don't miss our future explorations into the company shaping finance. Thanks for tuning in.
Thank you.